Hey, and welcome to the Passive Income Hunt. Today's video will focus on investing in stocks and crypto, where we will go through how to make money on stocks and crypto, how much do people make on stocks and crypto, how to sign up and get started on M1 Finance, and how you can get started with stocks and crypto. We hope you will enjoy it. How to make money on stocks and crypto. We want to share with you what we have learned about the financial market and how you can use it for your advantage. But first we want to make a short disclaimer. We are not financial advisors. Do not take anything we say as financial advice ever. Do your own research and consider if you want to consult a professional investment advisor before making any investment decisions. With that said, we can get started. With stocks, there are in general two ways which you can earn money. The first way is that you have dividend stocks which pay dividend every quarter or every year. This is a sign that the company has a hard time using all its surplus on growth and starts to give some of it back to the shareholders. When calculating to see how much you earn, it is usually calculated as a percentage of how much the stock is worth. The second way is capital gains, which is when you buy a stock for one price and sell it for a higher price. The amount between what you bought it for and what you sold it for will then be your capital gain. With crypto, there is in general mainly one way to earn money, which is capital gains. This works the same way as for stocks, where you will earn what the crypto coin has increased in value. There is, however, a second way to earn money with crypto, which is through platforms like Celsius and BlockFi, whereby having your crypto standing in your account on the platform, they will give you a weekly interest. On the platforms, you can always take out your crypto coins again if you want to move them, and the interest payments will then just stop. You will then have to decide on how you want to invest in the stock market. There are multiple ways you can choose to do it, and we will go through some of them here. First, you have to decide between 1. Do you want to choose the stocks and stock funds you are going to invest in yourself? 2. Do you want an expert to manage what you invest in for you? 3. Do you want to start with your spare money or in your employer's 401k? This will vary a lot from person to person what they choose to do, and nothing is right or wrong here. It simply comes down to what fits your personality the best. You will also have to decide on a strategy of how you want to invest your money. Here there are in general 3 ways. The first way is called dollar cost average, and is where you split up your money and buy a fixed amount in each period. For example, you save up money each month and buy stocks for them each month rather than waiting for the end of the year and investing it all at once. If you have a lot of money right now, it might also be that you split up your money and buy stocks for them in stages. That way you will average out your buying price, which will help you not to worry too much about the market top and the market bottom. The second way is through lump sum, where if you have a lot of money, then you invest them all at once. This is a more risky move, but because studies show the market always goes up, lump sum often beats dollar cost average, as you will have your money working for you in a longer period of time. We will make another video explaining this in more detail. The third way is by timing the market, where you try to buy the stocks when they have a low price and sell them when they have a high price. You aim to sell the stocks at the high price so you can buy them back cheaper. In general, this is a very risky strategy, as most people don't know where the market is heading and often don't know when to jump back in again. As a famous investor named Peter Lynch has said, far more money has been lost by investors preparing for corrections or trying to anticipate corrections than have been lost in corrections themselves. Which indicates that this strategy is not best unless you have figured out something that the rest of the world hasn't, which probably is very hard to do. For most people, the dollar cost average approach will be the best, where you just invest a part of your salary each month. How much do people make on stocks and crypto? How much people make on stocks and crypto depends on how much they have invested, what price they have bought at, and what price they can sell it at, or if they are still holding it. Since every person almost does it differently, as there are so many different buying prices each day, and so many possibilities that you can invest in, then it will be really hard to make an average for each person, but we can make an average of what the market in general has made. If we look at S&P 500, which was created in 1926, then if we look at the average annualized return for 1926 to December 31, 2021, then we can see that it is 10.49%, which indicates that if you had invested in the S&P 500 back in 1926, then you would have earned 10.49% each year as long as you didn't sell. So, if you invested $1 back in 1926, it would be worth $14,421.23 today. This, however, hasn't taken inflation into account, which would make the buying power lower from what $1 was able to buy back in 1926 to what $1 can buy today. An important lesson regarding investing is also that you might lose money, and a lot of people have lost all of their money because they became too greedy. They see that the market in general always goes up in a long period of time, but the market sometimes makes sharp drops, which can remove a lot of the percentages. When people get greedy, they often use leverage and borrow money to invest. Above 80% of people who do this lose money, because when the market then drops, the bank will often force them to sell the stocks and wipe them out with all their money lost, and they might even be in debt. This is because the bank doesn't want to risk their own money on what they have bought. So never invest money that you can't afford to lose and that you will need in the near future, because then you might be forced to sell at a bad time. That being said, since the market historically always goes up, the best time to invest was yesterday, as the market has more days during the year where it goes up compared to where it goes down. How to sign up and get started on M1 Finance. To get started investing, you will have to choose a broker where you can buy and sell stocks. For beginners who want to try it, we suggest a platform which doesn't have commission fees, for example M1 Finance or Robinhood. For crypto, it could be a platform like Coinbase. In this video, we will go through how to sign up to M1 Finance. Step 1. Be a US citizen or have a permanent residence in the US, green card holder. Step 2. Be over the age of 18. Step 3. Have a US phone number. If you got this far, then you can start signing up. Step 4. Submit an application for the platform. You will have to fill out with the information required. Step 5. Here you will either be approved or they will ask you for additional information. Step 6. If they ask you for additional information, they will give you the instructions to upload the information securely. Here the process will be handled manually, and it will take 5 to 7 days for them before they can review your document and open your account. When you have gotten approved, you can start setting up your account and figuring out what stocks or funds you would like to buy. How you can get started with stocks and crypto. In general, we think that all people should invest at least just a bit of their income so they can get into the mindset of growing their wealth. Remember, this is not financial advice, but a suggestion to what we would do ourselves. Unless you are a professional, you will most likely earn the most money by simply investing in index funds, as Warren Buffett also has suggested for common investors. Here we will suggest something like the S&P 500, but maybe also some of it in the rest of the world to stay diversified and reduce risk of losing money. There are a lot of funds out there and it can be really difficult to select one. We will suggest that you choose a passive index fund over an active fund. Where a passive index fund just follows the market, then an active fund is controlled by a manager which chooses when to sell and buy stocks. Since the active funds are controlled by a manager, they often have a higher yearly fee, and since the market is so hard to predict, then over a long period of time, the passive index fund often always outperforms the active funds. We will go through this in another video as well. We will also invest a bit in the crypto market, but since the crypto market is so volatile, we would not invest more than 5 to 10% of our entire wealth. Since the crypto market is still quite new and we like the history of the return of the stock market. When investing in crypto, we would only invest in the top coins, as we never know which coins will be part of our future and which ones will crash. As we are still young, we will not invest in bonds yet, as we mainly see the safety and low returns of them to be necessary in the retirement when you need the money. Right now, we would have the time to wait for the market to go back up. Each month, we will put aside money from our income and invest it into the market to hopefully make our money earn us more. This will create a habit for us to increase our wealth each month and pay ourselves first. Just remember that there are always risks when investing and you might lose your money, so only invest money you can afford to lose and never money you will have to use in the near future. You will need to have a mindset of a long investment of at least 5 to 10 years when you are buying. If you are still here, we would like to thank you very much for listening through our entire video. We hope you enjoyed it. Are you thinking about investing in stocks and crypto? Please share it below and we will encourage you to pursue it. If you like this video, please hit the like button below to show us that you would like more content like this. If you are not already subscribed, please do so. We will post new videos every week. Thank you for today and see you next week.